Hi, and welcome to this morning's concise highlight video analysis. It is currently 7:40 a.m. on Friday, December 11th, 2015. And it's going to be concise today because we're only going to cover the S&P video analysis. The rest either is much the same as Thursday morning's global view, to which we added the market observations, and those market observations are also still significantly the same. Even where there's been some movement, it's of the sort that we anticipated and will discuss after the S&P analysis this morning. And one of the key things to note when we mention how far down the S&P is this morning is that it's captive to a weak crude oil market. While some believe that may result in better economic conditions down the road, we know this happens in a sequence. And first, the weakness of the energy and commodity producers is going to weigh on equities before any of that lower energy and commodity price dividend comes through. So we have to ask, what does all this mean to the markets? And for right now, it means that the S&P 500 is trading down $15 at 2026 in the lead contract that is now March, and that's the equivalent of approximately 2033 on the $7 premium in December. And you can see where 2033 would be about $15 lower, 2033, 2034 from the 2049 we settled at last night. This is going to be very challenging for the bulls because after holding some significant slides early in the week, Monday's firmness sliding into Tuesday, and the early Wednesday activity down into the 40 to 35 area, if you are actually much below 35 and you've gapped down into a new low today, it could leave the door open for an immediate test of the 2020 to 2010 lower support. What we'll have to watch closely is whether the weakness this morning also pushes the market into a MACD, an hourly MACD that's the more important one, back below its lower runaway band. As you can see, when that happens, there are times when this means it's going to feed off itself and create further weakness, as we saw at these various recent phases last week into this week and historically. Now, on the other hand, if it should try to rally back up, initially you have to see if it can get back above 2040 on the 2040 to 35 support band that it had held previous, but the bigger resistance is up in the 2058 to 62. While it had a squeeze above there very temporarily, this lasted about 30 minutes yesterday, even though this looks like 2 hourly periods. This was about 30 minutes. It squeezed above it, cleaned out some of the weak shorts, and was right back down within 30 minutes of crossing above 2062. And that was a big sign later on yesterday it was still going to be weak. And that pretty much does it for the short-term view of the S&P 500.